Hi guys, can you hear me now? Please let me know in the chats if you can hear me. And let's start the session, guys. Let's start the session. If you can hear me, just write a yes in the chats. Okay, guys, can you hear me? Please write yes in the chat. So I'll just begin the session. We have 5 viewers, 1 like. Okay, 11 viewers, 1 like. Let's go. Hi, Pratik Raju. Hi, how are you, Pratik? Hi, Abhishek. Hi, Sudha. Hi, Mrunal. Hi, Dhara. Hi, Swapnil. Awesome guy, Jayant. Hi, everyone. How you guys are doing on? Hi, Nitish. Hi, Ramandeep Singh. Okay, guys, let's start today's session without wasting any particular time. And today we are going to learn about options, the derivative markets. And the session is in English, so yeah, let's go. Derivative markets, guys, today. Okay. So derivative market, what actually is a derivative market? So the term derivative refers to a type of financial contract, like financial contract in the say, it's an underlying asset or a group of asset or a benchmark. So for example, if I explain you what exactly this is, so in very easy words, if I say Nifty, you have heard about Nifty, guys. Nifty 50, the top 50 companies in Indian market. ठीक है what we just call in this in index form, if you know by any chance, Nifty 50. Now what if you want to trade in this company? What if you want to trade in this index known as Nifty 50? How do you trade? So this can be traded through various ways, which includes futures, contracts, basically, which includes contracts. And the contracts are in two types, futures and options. Have you heard about this term, guys? Futures and options? Please write yes in the chat if you have heard about this term, and we will then discuss this derivatives more further. So, have you heard about this term? Hi, Amrev, whether equities are done? Yeah, almost equities are done. Now we'll coming to fundamentals and long term on ETF mutual funds in the coming sessions. So, guys, top 50 companies. We know this as an index, Nifty 50, that is known as future and option. Now, these derivatives are something that is based on a group of asset or underlying asset or a benchmark. What basically this is? In example, if you say benchmark, it is like group of asset. It is like based on something else. Okay, so if Nifty moves, these contracts change their value. They're directly proportional, or you can say, if, like, for example, my phone is getting charged. Similarly, my phone is getting heated also because charging में थोड़ा सा heat आता है. Similarly, if this group of assets are moving up or down, my contract का value will move up or down. Okay. A derivative is set between two or more parties that can trade on an exchange over the counter, okay, OTC. So, for example, someone is buying, someone is selling, the contracts are being traded, and you can just trade any number of assets. इनके भी खुद के risk होते हैं. They have their own risk, and prices of this derivative drive from fluctuations in underlying assets. So, for example, if I told you there will be movement in Nifty 50 or Bank Nifty, right? There will be movement in Nifty 50 or Bank Nifty, and this movement will basically be changing the value in the contract. So if Nifty goes up, call options go up. I'll be later telling on what is actually call option, and if Nifty goes down, put options go up. So I'll be later telling on what actually is Nifty and Bank Nifty. So as I and what actually is call and what actually is put. But for now, you just need to understand how it goes. Okay. For now, you need to understand how it goes. So this was derivatives. अब derivatives के अंदर दो major होते हैं, futures and options. So futures are the derivative financial contracts that obligate the parties to transfer an asset at predetermined future date and price. So futures में proper एक future date होता है. It has proper future date, okay, and price set for that. Please share file links on Telegram and Discord. I've got 5 paisa link in the group. Sachin, you'll get it. You'll get it. Don't worry, bro. Okay. So it's predetermined future in date and price. The buyer must purchase and the seller must sell. So, of course, if you want to trade anything, what does trading means? That you're giving something in case of in return of something. So trading, you need to buy and you need to sell, and there should be at least two people. Okay, there should be at least two to buy or sell, regardless the current market price or the expiry date or anything. Regardless anything, you should have at least a buyer to purchase or sell and at least a seller to make the transaction. Future contracts detail the quantity of underlying asset and are standardized to facilitate trading on futures exchange. Futures can be used for hedging or trade speculation. Okay. So, for example, you are thinking to hedge your positions, you can use it. Now comes, guys, expiry date. What is an expiry date? So, do you know the concept of bread and butter? So, if you by any chance know what does a bread do? Okay, bread has expiry, right? Now, tell me in the chats what type, like how much time it takes usually for bread to expire in date. If you can just tell me how much time it takes to expire, it will be very good for me, and I can understand. Okay, this is the case. So tell me how much time a bread takes to expire. Tell me, guys, how much time a bread takes to expire. 1 week. Okay, 1 week. Okay, sorted. Some will say 12 months. Huh? Bread takes 12 months to expire. Bro, then you're living in most probably an Iceland or what? I never know a bread that takes 12 months to expire. I know 5 days, 7 days, 8 days, 10 days. Okay. So let's take a measure of 5 days. Similarly, guys, these FNO contracts has an expiry date. Okay. These FNO contracts have an expiry date. What actually is the expiry date for this? Okay. Let's check it out. There are two types of expiry date. One is weekly expiry and one is monthly expiry. The weekly expiry, that is particular week's Thursday. So, for example, today was Thursday. Tell me today's date and tell me if there was expiry today. There was a weekly expiry today. What is exactly weekly expiry? Every week on Thursday, there is an expiry where the options and future contracts goes to zero, where the value of FNO contracts goes to zero, and these are the expiries. Okay, not every contract will go to zero, but they will expire. The contract will expire today. Okay, today was 21st of July. Today was Thursday, so today was weekly expiry. And what is monthly expiry? What actually is monthly expiry by any chance? Do you know this? Last Thursday of the month. So last Thursday of the month will be known as a monthly expiry. Clear, everyone? If you're clear, please write yes in the chats. Last Thursday of the month will be known as monthly expiry, and the first and the third and second, all the Thursdays will be known as weekly expiries. Now, on expiries, in the for example, what if there's a case that it is a holiday? What will happen? SEBI, the government for stock market, will shift this. So now the new expiry will be, yeah, it is SEBI's rule. It is SEBI's rule. And for example, now the new expiry will be on Wednesday. Why? If there is any holiday. So for example, there's some Holi or something and the markets are closed, or there's a Sunday on Thursday. Not probably Sunday, sorry for this. There's, for example, a big festival on that Thursday and the markets are closed. So what will happen? What will happen? SEBI will shift this. Got it, guys? Did you get it? Please write yes in the chats if you get it. Got it, guys? SEBI's government for the stock market here in India. Bro, when we are going to start trading ना किसने मना किया है? Start trading, who has said no? Who has said no? Start trading. Okay, so I think it is clear to you. Now the weekly expires on particular week Thursdays and monthly expires on last Thursday of the month, which is in case there's any holiday, the expiry will be shifted by SEBI. Okay. Now let's go and let's understand. There's something known as lot size. So like usually what happens, guys, you can go and buy one share, two share, three share, five share, seven share, eight shares, right? You can usually go and buy one, two, three, four, five, six, seven, eight shares. But no, here in Nifty and Bank Nifty, there is lot size. There is a minimum quantity you need to buy, and the minimum quantity goes to Nifty 50 and Bank Nifty is 25. Or in the multiples of Nifty 50 and Bank Nifty 25, you can go. So, for example, in Nifty, you can buy 50, 200, 100, 150, 200, 250, multiples of 50, right? And similarly, the same is over here. Bank Nifty, you can buy the multiples of 25, 50, 75, 100. So for Bank Nifty, the minimum is 25. The lot size is 25, one lot, two lots 50, three lots 75, four lots 100. And for Nifty, the lot size is 1 for 50, 2 for 100, 3 for 150, 4 for 200, 5 for 250. Now if you come to this, what? Minimum quantity for stock options, right? Stock options may depends. Stock options for particular stocks, the lot size varies according to particular stock. I hope this is clear to you. Stock options, the lot size varies according to the particular stock. Clear, everyone? Please write yes in the chats. When will SEBI shift? One day prior or one day later? How to trade, I'll be telling you. Let's go one by one, guys. Let's go one by one. Lot size, you know. Expiry, you know. Now comes margin. What actually is a margin? So, basically for trading, you need money, right? You need money, right, for trading. So, margin is something like this only. Margin is something like this only. It is basically the amount needed for trading. The amount needed for trading. So, this is known as margin. Now, margin can be in different forms. First can be, of course, cash, which you will deposit in the broker. Second is pledge. Now, what actually is a pledge? Guys, pledge is nothing but when you guys buy long-term stocks, right? When you guys buy long-term stocks, when you buy long-term stocks, you need, you can give it as a collateral. So you can say to the broker that pledge this, pledge in Hindi will be girvi, right? So a case study I'll show you. गिरवी रखना है आपको basically nothing else. कि भाई अगर मुझे loss हो, so I am having, you tell to the broker, you tell to the broker, I am having 10 lakh of holdings of long-term stocks. Give me 5 lakh and take this as a collateral. If I don't return you the money, cash, you can cut 6 lakh from my long term. समझ में आया? What actually is a pledge? A pledge is a girvi. You tell the broker I'm having 10 lakhs of long term stocks, give me 5 lakh, and this is as a collateral. If I don't return you the cash, you can cut 6 lakhs from my long term. Mirza, you missed a lot of things. Please watch from the starting. Guys, clear pledge, girvi. We give gold to the shops, right? We give gold to the shops and we say them, please give us some money in the in return, and If you want to take my gold, you can just take. Yes, mortgage, exactly, mortgage. So again, the amount needed to trade, the amount needed for trading is known as margin. The amount needed for trading equals to margin, and margin can be in the form of cash where you're directly depositing in the cash in the broker, or it can be pledged. What is actually pledged? You have long term stocks, you give it to the broker for mortgage or in loan or in girvi, whatever you say, your word, your easy term, and then you ask कि भाई 10 लाख का दे रहे हैं आपको, I am giving you 10 lakh of long term stocks, give me 5 lakh or 5 lakh rupees cash as a collateral. If I don't return you the cash, you can cut 6 lakhs. So this is what basically happens as a pledge, and I don't really say that pledge this and pledge that. But again, it's all about you, and it's all on you that if you want to do it. And I will say just go for the cash if possible. Yes, 5 लाख की जगह 6 लाख देना होगा भाई, थोड़ा चार्ज तो लेगा वो. Why he'll give you the loan for free? He'll cut some charges, right? This example I'm giving, it's not that much, but I'm just giving the example. So guys, this is basically margin. In finance, the margin is a collateral that an investor has to deposit with the broker on exchange to cover the credit risk and the holder possesses for the broker or the exchange. An investor can create credit risk if they borrow cash from the broker to buy financial instruments. See, borrow cash from the broker to buy financial instruments. And understand this line. What is the financial instrument referred to here? Nifty 50 or the contracts or anything. You can sell, you can buy, and you're just borrowing the cash from your broker in the sense fires 5 paisa, upstock zero, the your wish. Buying on margin refers to initial payment made to the broker. Buying on margin refers to the initial payment made to the broker for the asset. The investor uses the marginable securities in the brokerage amount as collateral. I think this is clear to everyone. Please tell me yes or no if this is clear or not. Please tell me, guys, and if you have any doubts you can ask. If you have any doubt you can ask here. How can we talk to the broker? There's an option for pledge, and you can use the mails also. Show us how to trade on fires. Yes, in the live trading session, I'll show you, but first learn everything. Yeah, if you don't sell options and futures after expiry, the contract will expire. So ultimately, whatever the value will be in your bank account, or you will lose everything. Most probably, you will lose everything. Okay. Now, daily margin in equity segment comprises of the sum of VAR, value at risk. So in equity, what is the VAR, guys? VAR equals to value at risk. Tell me how much you can lose. Tell me how much you can lose if you invested 100 rupees if you have bought something worth 100 rupees. Buy equals to 100 rupees. Just let me know what is your risk now. If you have put 100 rupees in the market, what is your risk? 100, right? Similarly, VAR in equity, value at risk in equity, shows you that this is the amount you can risk. So this is the daily margin required, the value at risk. Whatever you're putting is the daily margin required, and it is also at value at risk. So basically, if you are at extreme loss, so 100 will be wiped out. Now, coming to what are stocks in future category. So guys, these are the basic stocks in the future category. Not all stocks are there in the future category, so you need to learn this stock, or you can just learn this and get this by practicing daily. So I'm just giving you 2 or 3 minutes to read all the stocks, and then ask you a question, why only 188 of them are in stock in futures? Why only 188 are of them in futures category? Why not all the 5,000? So this is a question to you. Get your answer ready, and meanwhile, just read this. And this is a 1 minute break now. Guys, it is not clear to you all. Please let me know in the chats. Guys, is it not clear to you all? Okay, no worries. So basically, these are 188 stocks that you need to mug it up, okay? And back, basically these are the very small words now, so it might be a problem कि आपको समझ ना आया हो. But again, these you need to learn up, okay? What do you do normally? Practice FNO or intraday? Let's start with intraday at least, and then go for FNO. So basically, I'll just tell you the reason why they are not available in normal market. These 180 stocks, 88 stocks are only there in futures category because of liquidity. So, for example, they are always not buyers and sellers, right? If you want to buy, someone should sell, right? कोई अगर घर खरीदना है आपको, you want to buy a house, someone should sell so that you can buy, right? Exactly. So basically, this is the same case over here. If you want to buy, someone should sell. If you want to buy, someone should sell. I hope it is clear to you now. While futures can pose unique risks for the investors, there are several benefits for futures over trading strategies. This include greater leverage. Yes, 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 Rabro, yes. You can do FNO in intraday. This is not like FNO is not is possible in intraday. But the thing is, key, there are only 188 stocks that you can trade. Okay, there are only 188 stocks that you can trade. And why these are 188? Because there are liquidity issues. So for the rest of the stocks, there are liquidity issues. That means you cannot buy or sell. Your order will be stuck. No one will be buying it. You want to sell, but no one is ready to buy. So you cannot sell technically. So these are the 188 stocks, these which are good one, and you can go for that. Now comes to let's do code options. You have learned about futures. Now let's learn options. When I want to buy, what if nobody is willing to sell? Yeah, same issues, now same issues. If you want to buy but nobody is willing to sell, so how can you buy? So order will not be hitted, order will not get complete, right? That's why there are only 188 big stocks. Aarti, ACC, Abbott, the good ones are listed over here. These are limited futures. These are futures. Let's learn and let's decode options. What actually decoding options is. What is an option, guys? Option is simply a contractual agreement between two parties, buyers and sellers. What is option? Option is basically a buyer and seller agreement. It is a contract, right? It is just contract, nothing else. So, for example, you want to trade FNO and you don't know what to trade. So you need to learn number one, and number two, if you want to trade an option, option has different categories where you can adjust your lot cost and everything. But coming to futures, you don't have a lot of options. It's directly one future. So if I say a student has a future, of course he has only one future, not two or three future. But I say about options, ki these guy or this girl has got options. Yeah, just normal English. Yeah, normal English. So basically, both are the agreements, the contractual agreements between two parties. But in options, you get more options. To be very frank. Okay. Expiry date is for Nifty Bank Nifty. Weekly expiry is on every Thursday, as I told you. And for monthly expiry is on last Thursday. I told you. Fin Nifty every Tuesday, and monthly is for last Tuesday. So, but no one does trade this Fin Nifty, so you don't need to learn this. You just need to learn this Nifty Bank Nifty weekly expiry for Thursday and Nifty Bank Nifty monthly expiry is for last Thursday. Strike price Nifty is for 50. Okay, lot size as I told you. This is not strike price, this is lot size. And Bank Nifty is for 25. I told you. Total 50 companies are there, Nifty 50. Okay, lot size. Nifty 50, Nifty equals to 50 and Bank Nifty equals to 25. For particular stock options, there are the lot size varies according to the particular stock. So stock options, stock futures, the lot size vary. But Nifty 50 futures and options, the lot size is the same. Okay. Why do people trade options? So basically because of leverage, the capital outlay. Now what is actually leverage and capital outlay? So for example, let's learn with this example. Infosys, right? Infosys, one stock is worth how much rupees? Let's Google it. One share of Infosys. Let's see how much it is worth. One share of Infosys. How much it is, guys? You'll get this PDF in the group. It's already sent. BSE, NSE both has option and futures. Can you see this Infosys is the worth 1532, right? What if you want to buy 300 shares? So learn with this example, 300 shares of Infosys at a particular price of 1760 will be equal to 5 lakh 28,000 will be equal to 5 lakh 28,000. But what if you buy a option of Infosys 30 December 2021 CE 1760? What if you buy this? Then capital required will be only 9,000. See, so basically with the help of futures and options, you can decrease the value but by the same quantity. So now you don't need to pay 5,28,000, you only have to pay 9,000. And how's this basically possible? I'll explain you. See, okay, see this. One share equals to 1760. How much is one share, guys? 1760. Now, for example, I know maximum up down, max up and down 10%. So why I pay for the 90% value? So I only pay for now 176 rupees. So I only pay 176, which is 10% of in fee Infosys, and I go for a FNO contract. So now you are in a contract, okay? Now you are in a contract and you don't have to pay the complete 1760 rupees per share. Capital means the total amount that is needed, okay? Rabro. So now you don't need to pay 1760 rupees per share. Maximum up and down is 10 rupees, 10%, okay? So you only have to pay 176, which is 10% of in fee, and I go for FNO contract. So this is why you have to pay less basically. You get a capital outlay, you don't have to pay a lot of, you get the leverage that you don't need this much of money to buy shares. So earlier you were needing like the need was 5,28,000, now the need is only 9,000 rupees. Clear everyone? Please write yes in the chat if it is clear to you. Leverage I've already told in the last past session. Please go for that, Mirza. I've already covered it twice. You get an extra benefit, basically loan. Okay. Now, what is a trade-off? What actually is a trade-off? I told you DK, right? Options, DK, time. When you get leverage, you get it both ways, right? You make a big loss, you'll get a big loss because you have already taken a big loan. Okay, and if you get a big profit, you get a big profit because you have already taken a loan. So leverage goes both ways, profit and loss. If you make it big, you make it big. Coming to time, there's a graph, guys, that is known as expiry graph. I'll show you this. So like a bread expires in 5 days. This is the expiry of a value of a option. So I told you like 120 days above it is formed. Okay, so 120 days it is formed. The rest 90 days the options price start decay. So you can just see time decay from 120 to 90 days is least. Time decay from 90 to 60 days is slightly greater. You can see the graph coming down. Time decay from 60 to 30 days is greater still, and time decay under 30 days prior to expiry is most rapid. So the last month the expiry will give you the most of the decay in the premiums, but in the coming 120 days it is very slow. So like a bread has an expiry like this. Learn this, okay? Learn this. It is very easy. Like a bread has an expiry like this, okay? How much days it takes for bread to expire? 5 days. Similarly, FNO contracts are launched at 120 days ago. So if any expiry is on next month, next month Thursday, it will be launched 120 days before the expiry. So this is the expiry on like today was the expiry, 21 July. Now 120 days, go back 120 days. This is how it was coming. How this FNO contract works? Yes, I'm going to explain, don't worry. So 120 days ago it started. It is 21st July when it is going to end. And at the expiry day, the decay is at max. Max means max. So that's why we say if even the market, see there are two case scenarios. Market goes up, your profit goes up, okay? But in expiry in FNO, even if market doesn't move, you will have loss. Why? Because these have an expiry like bread. Market goes up, first case, market goes up, your profits go up, okay? And market does not move, market does not move, still you will have loss. Still you will have loss. Why? Because of this expiry. So even if market does not move, your price will come down. Okay, your price will come down. So this is all about time and leverage, and why do people trade options and futures. Now there are two major things, call and put. Okay, so I'll just explain what actually is a call and put. Yes, Abhishek, the contract is reaching the end. So let's explain call and put, okay? Okay, guys, learn this. Call, if we buy this CE, by the chance, what is the full form of this CE? Call European, okay? Call European. So in futures and options, this CE is known as call European, okay? Now, if we buy this, if we buy this, we think the stock will go up. We think we are bullish. What if we buy put PE? What actually PE means? Put European. What actually PE means? Put European. And why, if we buy this, we are thinking the market will go down. The market will go down. So PE is put European. When we buy PE, which is plus PE, market or the stock will go down. We think that. If we buy call European, we think the market will go up. So this is plus, okay? Plus call, market will go up, the stock will go up, we will make money. If you buy put, which is put European, market will go down, you think market will go down. Now, if you sell PE, if you sell PE, it is complete opposite. What it is actually, let's see. You think the market will go up. And if you sell CE, you think market will go down. So you need to learn this, everyone. Okay, I'm showing you the chart. B is for buy, S is for sell, call European, put European, PECE, and this is the arrows. This is what you think. Okay, now you need to mug it up. So jaldi learn this. It's a 1 minute break till that you learn it, or else I'll just show you the theory of this so you can just go with this. Okay, there are two types of call options. First, if you long the call, it is bullish, which is it will go up. If you short the call, it is bearish. Put option, if you long the put, it is bearish, and if you short the put, it is bullish. So yeah, I've just maximized it. Is it clear to everyone? Check this. Screen is clear, guys. Is the screen is clear? You can increase your YouTube live video quality. Mohammed, you have to pay the lost amount. Clear, right? Okay. So guys, this is basically the thing. Okay, call and put, you need to learn it again. The more practice you do, the more you get the things more clearly. I have more drawings if in any case by chance. See if I have more ones. Okay, you can even refer this. Clear, everyone? Now let's learn about buyer or seller. So this is very easy again. When you are buying, you are known as a holder, also called a put or call holder. Okay, this is the exercise of buying. When you're selling, you are called as a writer. Okay, yes, it is costly. Lucky Star, I'll be telling in later because option selling is not the part as of now. So option selling, I'll be covering that. Buyer, you are known as a holder. Seller, you are known as a writer. Okay. Buyer, you are known as a holder, and seller, you are known as a writer. Akash, please increase your volume because I think it's audible to everyone. Now comes, guys, the thing known as option chain. So basically, this is the option chain where you have OI interest, option interest, it is a value. You have volume, how many shares are bought or sold, IV value, intrinsic value, LTP, uh, last price, okay, change in the price, bid quantity, bid price, ask quantity, strike price. Normal English, you can just check this out, okay. And how do you open this option chain? You can just go to your Opstra. You can just open first of all Google. Okay, everyone can open Google, I think so. Just you have to write Google. Once you open Google, okay, once you open Google, you have to open Opstra. This. Once you open Opstra, you have this first link for Opstra. Click on this. Okay, then you get something like this page. Click on Get Started, and this is what you get. It's completely free of cost. Now, what you do? Select your favorite Nifty or Bank Nifty. I'm gonna select Bank Nifty. Now you select futures and options. I'm gonna select options. Okay. You're gonna select the expiry. I told you the latest expiry you have to select. The latest expiry is 28 July. Bid is the price you are bidding for. It's normal English bid. Boli. Okay. You select the expiry, July 28 expiry. And now you have the option chain. Okay. Go for option chain. So now let's learn what exactly the strike price is. So guys, this strike price is different variation. Okay, I'll just tell you. See, strike price is different contracts which you can buy. For example, if stock Ashok Leyland is quoting at 126. Okay, if Ashok Leyland is quoting at 126, you want to buy the contract of 126, you can choose the strike price of 126. You want to buy the lower contract, you can choose the lower contract. You want to buy the higher contract, you can choose the higher contract. So it depends on you completely what you want to buy. Okay, now how to analyze and how to buy, how to choose the strike price for buying. So let's see. You go to Nifty. Okay, I have taught you that yesterday only I taught you that there is some pattern known as head and shoulders. Head, okay, this is shoulder, this is head, and this is again a shoulder. I told you right yesterday. And what does this indicate? Head and shoulder pattern. It indicates a downwards movement. So let's see what happened today if you have traded this. You first analyze your stock, okay? Like I am analyzing Nifty, for example. Okay, you just go. This is okay. Shoulder, head, shoulder, neckline, and see it just goes down. So we know head and shoulders will be in formation and it will go down. Similarly, here you can see the same. Now let's mark it in a good way. Okay. You can just use over here polyline tool. Just zoom in. You can get something known as polyline. Okay. Now you just have to mark this polyline. See, marked. See, I'll just show you over here. Oh, okay, marked, right? Head and shoulders, guys. Please contact Lucky Star Gaming. Please contact the sales team. I think you have joined late. You should have joined batch 13 now. It's already going on. The classes have already started. Okay, let's see this. Okay, let's see this. You have drawn this line head and shoulders. Okay. Now, for example, you already know if there is a pattern known as head and shoulders, it will, the price will drop. You know the price have dropped. See, it's very clear. The price did drop. How to calculate the target? You measure this uh, height of this your head. You just place it like this. Did the target hit? Yes, the target was hit. Choose the expiry. Choose the price. See guys, at what price the target is there. You have to look for the target price first. Okay. So first, for step one, draw your patterns. Analyze if the stock market is going to go down or up. Okay. If you think it is going to go down, what you buy? You buy put. If you think you want to you know go for downwards or upwards, so it depends. You want to go for upwards move, buy call. You want to go for downwards move buy put. So now this is for downwards move, right? Now just analyze the target. Your target is this. What is the strike price written over here? Check. 16,497. Okay, 16,497. So what you can do, just go to Opstra, choose your expiry, the nearest expiry. So 21 was ended today. I will choose 28 because 21 is gone today, right? So it is no more worth. Now the nearest expiry is 28. Okay, it was Nifty. And what was our strike price? 16,500. So you can choose 16,500. Okay, 16,500. Now this side is known as put side. See, put, this whole area, this side is put, and this blue side is call. Now you have to go for put because stock is going down and you have target of 16,500. So puts of 16,500, which is somewhere in this area, which is somewhere at 93. Buy this. Okay, you have to buy this. 16,500, put 93, buy. Check. Now the market goes down. Maximum loss is 5,000. Whatever you have invested, maximum profit is undefined. Okay. Market goes down, you make money. Bank Nifty goes down, you make money. Simple. Batch 13 will start tomorrow, next month, 10th. So this is how it happens, everyone. This is how it happens. So this is how you can choose strike price. Your target will be your strike price. I'll explain more for the concepts tomorrow, ITM, ATM, OTM, deeper concepts. But for now, this is strike price, and you can just go for the normal English. And if you don't understand anything, I'll help you. Don't worry. This is expiry time graph. I have already told you this. Strike price, I've already told you. Now this comes to ATM, ITM, OTM, which I'll tell you tomorrow. Therefore, hence the session is over today. If I explain you this today, everything you have learned today will go out of your head because this is a pretty tough concept to remember. Okay. So this is all about choosing the strike price. So right now what you can do is to start trading, figure out if it is going up or down. So like I figured out it is going to go down. I wanted to buy put. Okay, just go buy puts and go to the option chain and just check if you are getting something at 4 rupees, 5 rupees. See, so buy this one. So you'll not have a big loss. You'll have hardly 100 or 200 or 150 rupees loss maximum if you're learning also. So buy put when you think market is going to go down, buy call when you think market is going to go up. Okay, and just choose the strike price wisely. Just choose this 1 rupees, 2 rupees, 5 rupees while strike price, buy and sell and use the orders and start trading from tomorrow. I'll show you example in the live trading session. Markets are closed as of now, so I cannot show. We need to change the timings of the class then. But yeah, I'll show you one trading session, one live trading session. Don't worry. Thank you so much for joining. Yep, one live trading class will be there, or else I'll just provide a recorded video so that there will be no time issues with you guys because there are 50 or 100 students in English. They tell this class, this time is bad, this time is good, and then it's a mess. Yeah, you can start trading on equity signals, or you can trade on your own. I have taught you, right? Why to follow someone else when you know to how to drive and you know how to what is the roadmap? Why to follow someone else? Start trading on your own. You can never become Ratan Tata if you follow someone else, right? You can never become a Mukesh Ambani if you follow someone else. So the better is start trading on your own. Okay, guys, thank you so much for watching, and yeah, see you tomorrow at tomorrow's class. Thank you so much.